Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the corporate world so you don't have to. Today we are diving into a Form 8. K filing from Palladyne AI Corp, and trust me, this one has some interesting moves afoot. So what's the big news? We've got some significant new equity issuances and executive compensation changes coming out of Palladyne AI Corp, all happening around mid-November 2025. First off, let's talk about Palladyne AI Corp's acquisition activity. They've been busy. On the 14th of November of 2025, they finalized a deal with GuideTech LLC. This wasn't a small one. Details are a bit technical, but essentially Palladyne AI Corp issued a hefty chunk of their common stock to the owners of GuideTech. We're talking 2,672,013 shares of common stock. Now that's not all. They may issue even more shares if certain performance targets called an earnout are met, up to another $25 million worth. This all went down under a merger agreement, and they are relying on an exemption from registration for these sales. Think less public market offering, more direct private deal. And in another move on the same day, the 14th of November 2025, they also scooped up Wonky Precision Machining, LLC MKR Fabrication, LLC and MKR Fabrication Properties, LLC. For this deal, they made an immaterial cash payment. Now let's shift gears to something that will directly impact the folks running the show at Palladyne AI Corp. On the 15th of November 2025, after a lot of board meetings and getting advice from outside experts, they approved some new restricted stock unit awards. These awards are for the Chief Executive Officer and some other key executives, and they cover a massive 5360659 shares. But here is the catch. These aren't yours just for showing up. These awards are tied to some ambitious stock price goals. We're looking at targets ranging from $20 to $65 per S-share, and it is not just hitting the price. The stock needs to stay at or above that goal for a solid 60 consecutive trading days. That is quite a hurdle. The vesting itself is tiered. For the first set of tranches, hitting the price goal triggers 25% vesting, with the rest vesting over 6, 12, and 18 months, as long as the executive is still with the company. Other tranches have different vesting schedules. For the Chief Executive Officer, Benjamin Wolf, the award is for 4,470,942 shares. Other executives like Denis Garagic, the Chief Technology Officer, are also getting significant awards. Moving on to the public announcements, on the 17th of November 2025, the company put out a press release. This release touched upon the completion of the GuideTech merger agreement and another deal called the Crucis Membership Purchase Agreement. They also reminded everyone how they communicate important info, including their website and social media channels like X and LinkedIn. They want to make sure investors can find their news. And finally, for the exhibits, we have the form of standalone restricted stock unit agreement, which gives us the nitty-gritty on those executive awards. And of course, the interactive data file to make all this machine readable. So what does this all mean? Palladyne AI Corp is clearly in growth mode. They are acquiring companies and incentivizing their top talent with performance-based stock awards. The acquisitions suggest a strategy to expand their offerings and market reach. The executive compensation structure shows a strong alignment with shareholder value creation. They are betting on their stock price to increase, and they want their leaders to benefit significantly from that growth. The significant amount of stock being issued in these acquisitions, along with the potential earnout payments, means that existing shareholders might see their ownership percentage diluted if these deals pan out as planned. However, the focus on stock price as a metric for executive compensation is a positive sign for shareholders, as it means executives are financially motivated to grow the company's value. A key risk here is the successful integration of the acquired companies. Mergers are complex, and if GuideTech and the Crucis companies don't perform as expected, the initial value they bring could diminish. The earnout targets for GuideTech will be crucial to watch. Also, the 199% cap on issuing shares without shareholder approval is a standard protection, but something shareholders should be aware of. Overall, Palladyne AI Corp seems to be making bold moves, both in terms of expansion and internal alignment. The success of these acquisitions and the achievement of the stock price goals for the executive awards will be critical indicators of the company's future direction and performance. Keep an eye on how these newly acquired businesses perform and whether the stock price can achieve those ambitious targets. Alright, that is our deep dive into Palladyne AI Corp's latest filing. What is your take on these acquisitions and the executive compensation plan? Are they smart moves or risky gambles? Let us know in the comments. If you found this analysis helpful, smash that like button and subscribe for more corporate deconstructions, and don't forget to join our Discord community, linked in the description below for more discussions. Thanks for watching, and well, see you next time on Corporate Decoder.